Hey guys, I'm Jen. Welcome to this week's episode of Blockchain Banter Trading Crypto. I'm here with Dr. Mark Richardson, Project Lead at Bancor and CarbonDeFi, along with Keith Allen, TA and Algo trader and co-founder of Material Indicators. Maybe you can show us a little bit. We've spoken about material indicators before. We've spoken about the fire charts. We've pinned them to the top of the tweets and things, but you've never actually had the opportunity to share it and kind of show us a little bit of what you're seeing. And I think especially right now, approaching the all-time high, it would be a great time to do that. Are you able to share your screen with us and show us a little bit of what you're seeing?
I am, and I'm really excited about the opportunity to do this and be able to share our screens and see you guys in person and engage with you. Now I can validate the fact that Mark is indeed a rock star, and we're ready to climb in. So let me, bear with us, folks. We're navigating new stuff here, and glad to be doing this. I need to go to a share screen, which I think looks like this button, and let's just share this one. Okay, and I can expand this for us. So this is the this is fire charts, okay? And we talk a lot about bin CBD, and that's what this is down here at the bottom. If you guys can see it.
Mark, are you seeing it? Hold on one second, Keith. Mark, do you see it?
Not yet.
Hold on a second. Let's see if it pops up.
There we go.
There we go. Now I can see it.
Okay, so this is fire charts, and this is the bin CVD that we often discuss, and you can see it's binned into various order sizes. And when we started this, years ago, it was pretty evident that the yellow class of $100 to $1,000 orders was retail. That's no longer really the case. Sure, retail lives in that class, but whales are using each and every one of these classes to either accumulate, distribute, and that can be seen when we zoom out to higher time frames. We'll go to a year chart here and expand this so we can see it, and you can see that over time, look at what yellow has been doing over time, right? That's just a full year of distribution, right? And now what price is climbing higher, it's distributing. And Mark is somebody who embraces this concept, as do I, which is you sell when price is moving up and you buy when price is going down. And that's exactly what's happening here with this strategy. And if we switch to the absolute, this is all normalized view, which makes it easier to spot the moves. And if we switch to the absolute CVD, we can see the cash value of these moves and see that over the past rolling 365 days, there has been some 2.6 billion distributed with small $100 orders via just this single order class. Now, historically, it is actually the purple class of whales that have had the most influence over price on Bitcoin, not the brown mega whales, as you would think. And the reason for that is purple does a lot more volume. They trade a lot more frequently. And one reason
is purple, Keith?
Pardon me? Purple would be 100K to $1 million orders. Okay. And brown, we call those mega whales. Those are $1 million orders and up. And, to see, on average, those brown mega whales might do $1.5 million, a couple $1 million bucks. It's rare to see it, upwards of 5 million, now these are market orders, mind you. And the reason you wouldn't want to see a $5 million market order is because of the slippage that could happen there, right? So we tend to see those brown mega whales making their trades when they're running into deep liquidity so that minimizes their slippage. Otherwise, I really look at purple as my moral compass on what's happening. But as you can see, since December, red has really started. And this was Christmas time. This happened. This was running up to the ETF approval. And as you can see, they've just been unstoppable. Red pushing, these are now $10,000 to $100,000 orders. And I just zoomed down to the whole thing. Sorry about that. Let me refresh that. And they have, obviously been pushing, ETF demand, whether this is one of the ETF entities or or sailor or somebody that just wants to accumulate. I had a theory that this might be related to somebody owning the ETF, but it can also just be somebody who sees that demand and is just buying as much as they can. Maybe it's El Salvador, maybe it's Venezuela, hell, maybe it's the US, who knows? The bottom line is it's a lot of volume. And again, if we switch that to the absolute CVD, we are on the absolute CVD with that one. We can see that back at Christmas time, that was about a net of 2.8 billion in the negative, right? Minus 2.8 billion. And now they're up almost $1 billion. So that's a $3.8 billion move in that amount of time since December. So they're accumulating a lot here in that class. Now, as we are narrowing in on the all-time high, and let me just see if we hit it. Did we hit it yet? Nope. Rejected. And I'll take you back to that chart here in a bit when we finish off fire charts here. So we're looking at liquidity now in the order book, right? And these are not, a lot of people, there's a lot of liquidation maps on that people will see online. And this is not a liquidation map. This is actually limit orders resting in the order book. And we had this deep concentration of bid liquidity down here in the 35 to 38K range for a while. And this has most recently been pulled from here and moved up to this level. 52K is a level that I'm eyeballing very, very closely because of the amount of time that we consolidated in this range. So I'm very interested in this level. The only issue is we're in a new era, right? People always ask, oh, is this time really different? Well, yes, this time is different. We don't have any history of an ETF and the demand related to that ETF affecting price action like we see right now. It stands to reason that this demand isn't going to go away overnight, but it also is reasonable to think that this would be a good place for resistance. And if I can switch over to my candle chart here, I've been discussing this pattern here for a while, which is a cup and handle that, well, we got the cup. We weren't sure if we were going to get the handle or not. And it looks like we are indeed getting the handle formation. The question yesterday was, are we going to break up or come down and actually form a handle? And it looks like we're actually getting our handle here. The question from here now is, how deep does that handle go? Is it going to be, is this it? Right? Or are we going to get that real pullback that the market has been waiting for? I know I've been waiting for it. I know Mark's been waiting for it. Are we going to see 10%? Are we going to see 20%? Are we going to see 30%? Or down here in that 40% range? And this seems like a long shot. Like, how the hell is that going to happen with all this demand? Well, that's what's very, very different this time around. We don't know if we're going to get this, but I can tell you one thing. Don't believe for a minute that it can't happen, because we have lots of history of 30, 40% pullbacks happening in bull markets. So it can happen. The question is, with all this ETF demand, will it?
Keith, it's funny that you brought up the pullback, because I saw a tweet yesterday and it reminded me of you guys and our call specifically, because it was a quote tweet by Maine, big trader, right? Quoting someone who said, I am not confident in the market right now. I see I think it was 25%, 30% pullback.
25% gets us right to that 52K level.
Yeah. And it was the economic status, like where everybody is, where the economy is, all of these different factors. And they didn't go and name them all. And they said, I'm not going to go and name them all, but I'm expecting this. And Maine was like, I'm convinced this is just a troll now. And I don't know if it's sarcasm. I always admit that I'm the worst at recognizing memes from reality, or, like that sort of CT sarcasm. But it reminded me of you guys, because I don't think it was sarcasm. And you have been saying that you guys expect this. I mean, even Koryo at one point was saying this would be healthy, right? And Koryo, is that you behind Dave?
Yes, it's me. Hey.
Hi.
Dave's not here.
I should rename that to Koryo.
Welcome. I didn't get to introduce Crypto Koryo in the beginning. He joined us a little bit late, but if you aren't familiar, Crypto Koryo is a data scientist and narratives trader and Dune dashboard extraordinaire. So welcome to the call. Thanks for joining us. It's a little bit of a different format, so we're playing with it. You can see Keith's been sharing his screen a little bit. Do you, am I correct in saying that at one point, and maybe I'm mistaken, that you were saying this sort of pullback would be kind of healthy for us, that you were expecting it also at one point?
Yeah, absolutely. I think we all agree that pullbacks are healthy for the market. Because it just also, for us as traders, it allows us to re-enter some of the positions on some of the profits that maybe we took too early, or some of the stable coins that we had in place because we were expecting those pullbacks, and it would allow us actually to allocate more to the market. In the same time, it also, usually on those pullbacks, we have some liquidations, which means that it resets a bit the state of the market, the euphoria, the hype that we have in the market, and it's a good, healthy foundation for any long-term uptrend. You don't want to see a parabolic move every single week, because it's really, you don't know how to, it becomes really difficult to enter such markets, or to manage your positions. So I think it's healthy, and the history of markets tell us that it always happens, right? There is never just straight up, straight down trends. Although if you zoom really in short term, that might look it's the case, but in the long enough time frame, we always have correction. Now the question is, when will that happen? Obviously, we have discussed in the past weeks that some sort of correction would be expected, but we haven't seen anything. Although I would like to now share my screen as well. By the way, I love this new format because we were always talking about charts and different data that we are seeing, but couldn't really share what we were seeing actually with the charts. And so I really love this new format. And so let me share my screen, and let's first go over Bitcoin price action. And so you guys can see my screen?
Yes.
Okay, perfect. So let me go actually on Bitstamp. That gives us a bit more of price action, and I can actually give my analysis after seeing Keith analysis. So we are in the monthly time frame here, and as you can see, we have been on 1, 2, 3, 4, 5, 6, 7 consecutive green candles, pretty strong green candles, which isn't that usual, right? This kind of consecutive green candles. I mean, even here, 1, 2, 3, 4, 5, 6. We are now on the 7th. It seems that March, at least so far, it's a green one, and it's difficult to see that closing in red. So, and if you zoom out here in the history of Bitcoin, you would see that we have strong uptrends, although it's rare. It's really rare to have 7 consecutive green candles on the monthly time frame. Even here, with this very strong uptrend, you can see that we had a red candle here, a red candle here, here, and so the longest here in the previous bull market, I mean the 2017 bull market, was here 1, 2, 3, 4, 5, and there was a big correction here, and again here in 2013. That was a long time ago, but again, we had 3 months really bullish. But then you can see here there is a very strong correction, although it finished with a green candle, and then the month that followed were also red. So we haven't seen, even since the inception of Bitcoin, or since we have the price at least here, we haven't seen like 7-month green candles. And so, as Keith was saying, it is a new environment. We have never been in such environment because there are a few things. First, we know that the 4-year cycle are really playing out perfectly, and we have the halvening just around the corner, and this has been always bullish. But we have other catalysts that we didn't have so far, and that's the ETFs and the banks that don't stop buying, and all of these things are just contributing to this. And it's the strength of this move, especially if now I zoom in a bit, on the 2 weeks. Look at this candle. The strength has been phenomenal. So even this, one of the upcoming threats that I have is what happens after such strong candles. Here you can see we have a 35% candle almost in a 2-week time frame, which is really, really strong, like similar to some of the strongest we've seen so far. So the question is, at one point will we get a pullback? Now, if you look at this, it really looks bullish. To see some sort of pullback, you have to zoom really actually on the lower time frames. And actually, we might argue that we had a pullback, right? We had a pullback, and here, if you look from up to down, is like kind of almost 5.5% that we had just around 10 hours ago. By the way, I tweeted about that because I went to sleep around there. I'm in Europe, so I sleep there. I wake up in the morning, I see that we pull back 5%, and then price was back at the same level. So this is really a bull market kind of environment. This kind of price goes up and down, and immediately was bought. You can see how strong it was bought. And by the way, this is not just on Bitcoin. If you look at the total market cap, we see a similar pattern. And if you look at the alts here, total 3 similar kind of pullback and coming back. So the market is telling us that the sentiment is so bullish that as soon as we have 5% pullbacks, people already consider that, okay, this is a level where I'm comfortable buying this dip, and this is already the big dip for me. And you see how quickly it resolves. So now maybe if this is a pullback, now maybe another question would be, okay, when will we get a pullback on the higher time frames? Meaning here on this kind of weekly time frames. Well, we discussed last time about reflexivity and the fact that many people were waiting for this breakout. And if you look at the higher time frame, we are seeing here clearly breakout. We are on the monthly time frame. It's obviously the highest we've ever been, at least so far within the month. Same thing on the 2 weeks, same thing on the weekly, and all the way in the lower time frames. We've never been at these levels. Here, just maybe here, we are exactly at that all-time high on that time frame. But it's clear that this is not the end, right? We are not expecting, because of the forces that we know in the market, we are not expecting any kind of triple top or anything like that, because we know that the halving is coming. We know that the banks are continuing to buy very, very aggressively, and we expect continuation. Therefore, when will we having any kind of meaningful pullback? So to answer that question, we can have a look at what has happened in the past bull markets. And when you look at that, for example, here you can see we have again here is 2-week time frame, and again in September, when the DeFi summer started, we had many weeks without any kind of meaningful pullback on the larger, higher time frames. As you could see here, these are really shallow pullbacks. Everything is in green. As soon as there is a pullback, it was bought. And so it's really an environment where if you're a conservative trader or if you're sideline, it's really difficult to find a good opportunity to enter. And if, for example, let's say that we are currently at similar levels in terms of considering this rally here, if we are somewhere here and you wanted to wait for some kind of correction, look what happened here. We had one big candle, and another very big candle. And maybe it was only here where you could see, okay, this is some kind of correction for me, which is like 35% correction. But even that correction would is much higher, compared to where you were thinking about, shall I buy the pullback? Shall I buy the pullback, or shall I just enter? So we are in this kind of environment. And let me also say that we usually, the most bullish part of the price action, as we know historically, always happens after the all-time high breakout, right? So here, this happened, these bullish green candles, look at the strength as it's getting, we are getting close to the all-time high, previous all-time high. Is getting bigger and bigger, and I'm sure that we are going to see bigger and bigger candles once we are, clearly above that. And again, something similar happened here. So, kind of consolidation, and then once we are clearly above the previous all-time high, we start to go really high and get these bigger candles. So I repeat a bit what I had said in the previous weeks, which is, to me, it's really not an environment to be bearish, and the price to pay for being conservative is too much already. I mean, already in the last 2-3 weeks, if you were sidelined, you have already missed on, what did you say, 30 to 40% easily. And this is maybe because you were even expecting a small pullback of 10-15%, so this is the type of environment we are right now. And so these are the fundamentals. The sentiment is also extremely bullish. Now, maybe let me mention just a few things about the alts and everything before continuing the discussion, which is, if you look at my narrative dashboard for the first time, I can actually show it. So
it's nice that you're actually able to show it now. Keith, I know you got the private walkthrough, but now we can all have a little bit of a peek at it from Koryo itself.
Thank you. So here is by the way, I recorded the video. It's coming later this week. It's an in-depth video of 70 minutes on this dashboard that I will post. So stay tuned about that. But nice. One of the charts that I'm looking mostly is this one chart. And so here we can see all the different narratives. And what I wanted to highlight is we are seeing the memes.
I knew you were going there.
Yes, I mean,
you can't not mention the meme coins right now. And I saw that you were playing when you were updating your meme dashboard. I was going to ask you about it if you didn't, but I figured you wouldn't pass this up. I'm glad you're not.
You see here I have them because it's part of the cycle. It's important to follow the trends, and look at this incredible outperformance of the memes that we are seeing compared to any other narrative, and it's so strong, and it's 3x what is we have on the second narrative, which is, by the way, also ordinals are kind of like memes or NFTs combined. So we can't even compare it with that one. We should go here and compare it with the Bitcoin narrative, and here we are already what is it? It's like more than 9x. So it's huge, and we usually don't see that. So why are we seeing this? Because on one side we have the banks and institutions that are buying. On one side we have, because prices are going up, we have new retail users that are coming, that weren't there before. Maybe they were there in 2021, they left, now they're back. Maybe completely new set of users are coming. And all these people, what they usually buy is, the simplest thing that they hear maybe on a YouTube video or something, or maybe just from their friends. And usually it's about memes, and because it's the easiest thing to understand, and it's fun. And so I was actually, so we can go back here.
I would argue that they don't necessarily even understand it.
Yeah.
Because I had a friend, a longtime, nearly lifelong friend called me yesterday, and he was like, he was in a panic. Should I sell? Should I sell? Is it going to still go up? Is it still going to go up? I said, well, what are you trading? He said Shiba Inu. And I said, what else? He said, just that one. And I and I said,
it's really hard to give advice, right?
And he's had it for years, right? And it was a small position, it was like $500, and he's like, and now it's up to, the other day it was down $700, and now it's up like $1,500. I said, well, what do you think you should do?
That's the question. It's the question with a question, because you can't.
I mean, unless Koryo can show us a fundamental reason why it's going up, other than a bunch of speculators are getting behind it because they smell the market and the opportunity, and thin liquidity can rise easy. I don't know of a fundamental reason that coin has done what it is doing at the moment. I discussed it with him, and he ended up taking out his he ended up taking out his original investment. So now he's playing with house money, and it's still going. So he's in good shape, right? He's got nothing to lose at this point. I personally really tend to avoid coins like that, but sometimes you see opportunities like this and it's hard to avoid. I took a flyer on Doge back in January because it was, so there was supposed to be a Doge satellite launch coming up that was postponed before. That got rescheduled for February. I literally never heard a word about it in February. And it was underwater for a little while, and then over the past week, it started to climb. I went from it was bleeding horribly, down 10% or so, to up over 20%. I went ahead and closed it on the pullback and got back in on the dip, and just had a trailing stop loss, close the other one at almost 40%. So, might I squeak another couple of points out of it? Might it soar higher? Sure, it might. But am I complaining about those two trades? Not at all.
I think that's such an important point. I know we touch on it all the time, and I say that I've always been guilty of this, because you always think it's going to go a little bit higher. You're going to get a little bit more from it. It's going to go a little bit lower. And you're just kind of like at that point where, do I pull the trigger in either direction, whatever it happens to be, right? But having that sort of mentality where it's like, I could and I might, but do I actually want to gamble that? Do I want to take that chance? Am I happy just with what I have here at the moment, or where the price is right here at the moment? Similar to what Koryo was saying earlier about if you had waited for this sort of pullback, like right now, what he's saying is that every little pullback is a buying opportunity. And that's by that sort of recovery.
And to Koryo's point, with something like Bitcoin, that does have some fundamental use,
right,
then maybe you don't want to get into trying to snipe every percentage point out of it. With something like Shiba Inu or Doge, I'm not holding those long term personally. There are other people are, and that if that's your game, then by all means go for it. You'll probably do very, very well. But my personal strategy, I scalp those coins. I'll swing trade those coins. Not really a long hauler on memes.
Right.
I would like to just to finalize my thoughts about that. Come to this chart, and I think it's important to distinguish one thing. One is, for me, at least as a narrative trader, I do not trade all of these narratives, right? I do not always trade memes, or maybe rarely, and I do not always hold all of these assets. However, I observe them and I see what trends we can actually get from them, and what does it mean for the market structure, and what does it mean historically. So one of the things, for example, that I mentioned in one of my tweets recently was about centralized exchange tokens. So last month, you could see that. So here we are on the narrative of centralized exchanges, or CEXs. Here we have actually the tokens of different exchanges like Crow, which is crypto.com, KuCoin, Binance, Gate.io, etc. sorry, crypto.com has been outperforming really strongly recently. And usually, historically, if you look at when that happens, is when you have new users, new retail users who just want to open up an account, crypto account, and then they go with maybe some of the most established ones, which crypto.com, at least in the US, they also have a strong online presence and advertisement. So it's a one that immediately when the market turns bullish and we have this bull market environment, gets a lot of new users, and you can see actually in the token appreciation here, because people have to stake some of these Crow tokens, etc., etc. So it doesn't mean that I'm trading this token. I have never traded it, but to me, when I see that pattern, I see, okay, this is, I know that historically what that means. The same thing holds for memes, and I just want to come back to this history of narratives, as I call them. You do not have to trade memes. However, it's important, or it's useful, let me say, to know what does it mean when memes outperform the market. And you can actually, here I have this chart or this table which shows the history of narratives, as I call it, the best performing narratives of each month and the worst performings as well. And so here, if you search memes, you can see on all the occasions where memes were among the best or worst performance. And here, if you look at the data, look at when memes were the best performing narrative. December 2020, so just right when after DeFi summer started, memes were in September the third best performing, in October again third, in December second best performing narrative, among many others. I have around 30 narratives here, so being among top 3 is really something pretty remarkable. And then immediately, so you can see this transition from third to second to top. So in January 2021, it was the first one. And then, for February, March, it wasn't among the first ones. And then again, in April, in May, in June, it was among the first ones. And also in October, it was the first one, which we know it was kind of the end of the bull market. And look what happens after. The next time we see any reference to the meme market was just few times within the bull market, the bear market, and it was on month where everything was negative. So the returns were actually negative, but it was still among the best ones. So we are seeing a clear pattern where in a bull market environment, or where it starts, the meme narrative appears a lot among the top performance. And if you look at 2023, here we are seeing everything from 2023, December, etc. We had in May, we had actually, if you remember last year, we had, and that's when Pepe came. But then the month that followed, we didn't have anything. And October was the first month, was actually the start of this bull rally that we are seeing. And guess what? The meme narrative was the best performing narrative that month, which is, if you were paying attention to these trends, you know that if after a long time, the meme narrative is the best performing, it means that there is more risk appetite, the sentiment is turning bullish, maybe there are new retail users, and so there is continuation usually. And so we are seeing now the same thing. 2024 memes were last month already among the best performing ones, and this month we are already seeing, look at this performance. So to me, this indicates a new environment of the bull market, and you do not have to touch any of these tokens if you're not comfortable with the volatility, or you think that they are worthless. However, you can just observe them and trade whatever you'd like to trade, but it will help you with the market cycle and your understanding of the trends.
That's awesome. It's neat because, Keith, you have your own form of indicators right? With material indicators. And then Koryo's got like his own as a narratives trader. You know what I mean? These are like
Yeah.
key indicators that he's looking for also when kind of basing his trades, right? Not
Yeah,
even necessarily those, but just kind of where we are in the market right now.
Yeah, and I echo Koryo's sentiment about, you don't have to trade memes. That said, there's obviously an opportunity there if you understand the risk. And I really approach it with a very simple principle. The greater the risk, the greater the reward, right? If you're down for it, if you want to put some money at play, then by all means, there is obviously a great opportunity to make some money with some of these assets that probably a lot of more disciplined investors, and certainly on the TradeFi realm, might not even look at. But you can't deny the performance that these assets are delivering. So, I approach them with just manageable position sizes. So if it does go to zero, and I told my buddy yesterday about sheep. He's like, if this thing goes up, I got millions of shares. If it goes up, it could really turn into something. I'm like,
Millions
yes,
of
but it
shares,
can
I love
also it can also go to zero. And so, now he's taking his risk off the table. It doesn't matter if it goes to zero. He'll get out.
It's nice to have that weight off when you take out your initial like investment and it's like, okay, now, like you said, it's house money. It's a little bit less stressful.
It's nice to have enough
not
profit in a trade too, that you can take out your initial investment and still have a sizable position that can appreciate to something.
Yeah. Mark, I want to go to you because we're talking about, historically, this is what's happened. And will it repeat itself? It's been known to, but now we have different narratives. Oh, Koryo left. He'll be back. Now we have, the ETF and everything else happening. So maybe it will, maybe it won't, right? But I know that CarbonDeFi had just released has just released a simulator. So a back testing tool on the front end for desktop users on the UI for CarbonDeFi. If you are able to share your screen, I want you to show us a little bit about that because I think it's a really valuable tool, especially when looking at historic data. And then I also want you, if you're able to, we talk about these 5% pullbacks, and Koryo was saying earlier, this was an opportunity for some, 5%, they're happy with it. And then Keith is saying, maybe 20%, this is kind of, like the tweet that I was seeing. So maybe you can show us on chain how someone might be able to set themselves up to buy the dip from somewhere between like 5% down to 10, 12%, something along those lines. I want you to kind of show us a little bit if you don't mind.
Sure. Can you see my screen okay?
We can.
Yeah. So yeah, I think that what Koryo is warning against is a very legitimate perspective, but one of the things that you need to appreciate when you're trading, especially in cryptocurrency, is that it is dependent on your numeraire. As you know, as you've heard Keith and I espouse previously, not having a position is also a risk. There is no risk-free anything, right? Even being in cash has certain risks, which is the fact that the market is going to leave you behind. And what Koryo is arguing is essentially that, right? That if you're waiting for these dips, you're missing out on these 30% and so on. The truth is that it continues to get more complicated than that, because we're measuring these 20% dips and 30% dips or whatever it is versus a 2x run up versus the US dollar. And I'm not saying that that's necessarily a bad yardstick. In fact, it's a pretty good yardstick to measure things by. But when you're this deep in the market, sometimes it makes sense to measure the movements of some of these tokens versus other tokens, especially if you are sitting on a blockchain like Ethereum where you have so much choice. I think that it does actually behoove us to think not just in terms of the US dollar, but in terms of the value of other cryptocurrencies. So for example, so with the simulator, one of the things that we can do here, if I put this back to USDT, maybe. So we've recently upgraded our backend so that we can have access to historical price data and allow people to simulate how certain trading strategies would have performed. And so this is now becoming a part of the de facto UI UX for Carbon, and it means that you can now sort of experiment with what the product does before you decide to drive it. And so there's a couple of points that I want to make here. So the first one is that when you see a price going up like this, implicitly it means that the price is also going down somewhere else, right, on the other pair. So for example, this is the price of the US dollar versus Bitcoin, since April of last year. So even when stuff is going up on that specific trading pair, all you have to do is flip the numerator over, and you see that you're also in a downtrend. It's just you're in a downtrend versus your numerator asset. So let's have a look at some of these things, and then I'll touch on I'll touch on some of these other concepts as we continue. So what Carbon is, or what it represents, what it allows you to do, is to create automatic trading ranges. And this is a bit of a re-education, I think, for the cryptocurrency markets, because they're, most of the users on blockchains are used to the idea of de facto liquidity provisioning on essentially mean reverting protocols. And mean reverting trading strategies are not is absolutely not a bad thing to have available. In fact, it's a very popular trading strategy in many circumstances, but we shouldn't treat it as the only trading strategy. And so what Carbon allows people to do is to create a much more flexible or it offers a lot more flexibility with respect to how you can interact with markets. So what I'm going to do here is, I'm going to have a look at the price of wrapped Bitcoin. You can see that it went up and down a little while between April and September, and even into October. And so what this red range is it represents my asking liquidity and where I want to set those price bounds. And you can see when I play with the interface over here, it's moving the my minimum ask and bid range over here on the left. And so what I'm going to do is I'm going to pretend, okay, like if we could go back in time, what would have been a good way to trade this range if we knew that Bitcoin was going to sort of move up and down and sideways for a little while? And so I don't think that it's too controversial to say that the strategy that I have put up here is probably a pretty good one, and even sort of I could optimize it further by moving our liquidity all the way to the top here, but I don't think that's very interesting or very fair. So we're trying to simulate something that if someone had a good knowledge of the market or a clear expectation, how would that sort of materialize over time? So after we've set our ranges up like this, so my asking liquidity in red, my bidding liquidity in green, I can then decide how much wrapped Bitcoin I would like to commit to this position. And I'm just going to commit 1.23456 just to choose a number. And Carbon is unique because we can set up limit orders even if we don't have any money. So in this particular case, I'm funding my asking liquidity with Bitcoin, and my bidding liquidity I'm just going to leave at 0. And what this means is it's going to wait until some of my Bitcoin is starting to be sold before that USDT becomes available to fund my bids. So after we set this thing up, this is really all you need to do, right? Is choose your price ranges, your starting token balances, and then decide to start the simulation. And so people have seen me do this on community calls and things before, but there is that's an interesting result. We'll come back to this. But there is a Python model in the background here that is that is calculating exactly how this strategy would have performed over this particular part of the market. Now, this is an interesting example because, well, for a couple of reasons. First, you can see that the bidding liquidity is completely grayed out because I didn't put any USDC in it. But then, as the market sort of moves into our asks, that liquidity starts to recede, and it is then funded on the other side with bids. And so this is essentially the product that the Carbon represents.
Can I
So you
break
can
this
see
down a
during
little
this.
bit really fast? I just
Sure.
want to add something because we talked about scaling in and out before, and this is
Mhm.
what you're doing by creating these two ranges, right? We've spoken
Yeah,
about
well,
how
this is actually called fading. So when you're fading, if you like, is scaling out only to scale back in as the price comes back the other direction. So scaling in and scaling out generally refers to a one-directional thing. So for example, if you have accumulated a very large Bitcoin position over the last decade, you may be interested in scaling out of that position during this bull run.
right.
And that's something else that we can
Okay.
simulate. But,
So because
but when
these
you're
two
doing
orders are
both,
linked, it's fading.
correct.
Yeah,
Got
essentially,
it.
you're recycling the range.
That's
Exactly
exactly
right.
right. You're recycling the range and you're recycling those funds automatically. So you're not actually
Yeah.
doing it. I mean, the protocol is, right? But
So
all of
yeah,
those that you acquire automatically rotate to fund the opposite order to continuously trade what it is that you're showing us.
yeah, exactly. So
Yeah.
in a traditional exchange system, what you would have to do is like after your order has been executed, those funds become available somewhere else, right? And this is a part of the account keeping systems that have been, built into the exchange infrastructure since sort of the 1970s. And after you collect those funds, if you wanted to recycle that range, you would have to put the order back into the book, right? So it's a relatively manual process. Now, of course, there are APIs and things available where you can sort of automate this thing. But even some very seasoned traders, find using those kinds of those tools a little bit intimidating. And so with and on a blockchain, until Carbon, there really wasn't a very compelling way to do it. And so with Carbon, it's actually built into the infrastructure. It is a natural expression of the smart contracts. So you don't need to be a programmer. You don't need to be, you don't need to mess around with API management or anything like that. You can literally just tell the system what it is that you want to do, and the simulator is made to help you sort of make those decisions. And this is why I've chosen this specific pair. And we'll come back to one that's a little bit more interesting in just a second. But you can see as the as the price of Bitcoin was moving around inside this range, we are essentially always selling it at higher and higher prices. And then when those asks are depleted, we essentially run out of asking liquidity. And then when the price comes back down, it starts to then eat into our bids. And so if you can recycle this, as Keith said, many times, then your portfolio actually does quite well. So you can see over this strategy, by the time we'd finished trading, so this is about 5 months of trading Bitcoin, and this is already at about a 20% return versus HODL, by the way, which is an important point. But as the market continues on, because we're no longer holding the Bitcoin, you can see now our portfolio value is going down. So the simulator is built to help you understand exactly the financial risks that you're taking. Because if you're trading Bitcoin down here and the market does take off, then you may be disappointed that you sold all of your Bitcoin. And this is why, I'm generally an advocate for doing things in small amounts, right? You never commit your entire bankroll to a single bet, and with trading, it's the same thing. Now,
Also, it's historically too, Mark. Sorry, not to interrupt you, but if you're trading WBTC and USDT, I mean, Koryo and Keith, when they were showing us charts earlier, they were both going back. Koryo, I think he went back to like 2013 or 7. You know what I mean? Like, went back pretty far, right? So you can, in uncertain terms, right, kind of see what this pattern is. So during this sort of bear market, during this chop and this, crabbing, this is when you could take advantage of that and not sit there and be like, that meme where we're all poking the,
Well, sure. And that,
right?
and this is
And
one
then
of
these-
the this is some of the comments that I've fielded like over the last year, which is, yeah, but what do you do during a trending market?
Mhm.
Because carbon has these kind of horizontal steps, which means that if the market is moving with momentum in a particular direction, this can actually be very difficult to fade. And setting up a full scaling out strategy, which would look something like this. So this would be essentially, we wouldn't put our bids in, and we would just say, okay, you know what? We don't know where the all-time high
I'm
is
happy
going
selling
to be
at
this
this.
cycle. Yeah, start selling at 70K, and then keep selling all the way up to 100, and hope that we get there. Now, if the price of Bitcoin goes past 100, you might be upset that you didn't have any Bitcoin left, and you should take that into account. Like if you really think it's going to go to 120, then maybe a range of 90K to 120K is more your cup of tea. But you don't have to fade, right? You can very easily just say, you know what? I just want to scale out, and I don't care how long it takes the market to take my my asking prices. The only important thing is that these are the price targets that I have, and this is what I want to do. Now, this is one way that you can trade a trending market relatively well, is to just set up price targets to the upside and just wait for the market to take them from you. I think this is a very disciplined way to trade, especially if you're not trying to catch the chop in the middle like Keith and I do. But one of the things that I wanted to point out is that this is still a very biased view of things, because we're measuring things in the US dollar. If you have a look at what happens on a blockchain, you can actually find other pairs. So I'm going to throw up a token here, which is the 1-inch
That's
token.
an interesting one.
Yeah, and now you start to it's a very different story, because 1-inch, and other DeFi tokens tend to they trend in the same direction as some of these other leaders. So and that can be good and bad. This would be the price of WBTC starts to turn around. We would likely see a crash in 1-inch as well, but it would likely look pretty flat like this. So this is an interesting one because it has outperformed Bitcoin recently, and you can see it's actually got a very good volatility profile, right? You won't find these kinds of volatility profiles anywhere. And so what I wanted to show you was that if you if you relinquish your dependence on things like the US dollar as a way to price tokens, then what you find is that there's actually an enormous reservoir of opportunity to continue trading in a fading-like strategy, even when the market is strongly trending. And so in this example, I'm going to do exactly the same thing. Let's say 1.234 WBTC. And instead of using USDT as our numerator, I'm going to use the 1-inch token. And so you'll see when I start this simulation, instead of a negative 46% return versus HODL, we're now looking at a plus 41%. And this is over HODL. So this is 41% on top of the 3x that Bitcoin has done. So there are very effective ways to trade these markets if you have the tools available. And until the simulator was released, and this is why I'm so excited that we've released it, it was very difficult to find this kind of information and sort of educate yourself on how to trade things. And especially, getting the Bitcoin versus 1-inch chart, it might not be trivial. And this is why we've committed so much effort to making sure that we support as many tokens as we can on the front end, and basically support every single trading pair known. Now, this is something that's going to take us a little while to to complete. So, for example, if I put up Chainlink versus 1-inch, this is something else that you might trade. And again, you can see the volatility profile here is very, very attractive. This is something that I think a seasoned trader would be very happy to see. And
question for you, Mark.
Go ahead.
So you just showed like a 40% ROI on 1 inch. Can you flip the pair? And this to me is the greatest value of trading alts against Bitcoin. Flip the pair so that you're getting paid in Bitcoin.
Absolutely.
So at that
Let's
point,
do that.
you're essentially minting more BTC.
Yeah, it's more effective than mining.
Right.
So here we go. So this is the price of WBTC coming down versus 1 inch, and so we can basically run that that same strategy. So now we are using WBTC or Bitcoin as our numeraire asset, and we're using 1 inch as the risk asset. And this is kind of what I was saying, is that when something's going up, it means the other thing is always going down, at least in a relative context. So yes, we can do that. So
Right,
what we'll do here is, because the price is coming. Yeah, go ahead.
I was going to say, in this scenario, if 1 inch ends up running, and you have none left to sell, you don't give a shit because you've just printed more
Because you've
Bitcoin.
got all this BTC. Exactly. So let's run that simulation. Should be pretty similar. So I moved the ranges a little bit. So yeah, you can see. So I started this strategy with 1.23456 WBTC, and you can see here, as it simulates our trades, that we actually improved our position by almost half a Bitcoin, which is about 35%. And so, yeah, you're absolutely right. In this particular situation, if the 1 inch price suddenly takes off, we don't mind, because we managed to keep, this WBTC in the meantime.
It's a good amount of Bitcoin
Beautiful.
to gain. Yeah. We're at the top of the hour, guys. I just looked up and saw the time.
I should point out that the simulator, it has some assumptions in it. Like, simulation is necessarily a science of compromise. So there are no limits to how much Bitcoin I can put in here. So if I wanted to give myself, in this case, $831 billion of Bitcoin, it will still very happily, simulate this for me.
If you have 831 billion in Bitcoin, when we get together, you're buying.
Right. So yeah, the point that I'm making is that this is it has some assumptions built into it, such as that your position is relatively small compared to the overall size of the thing that you're trading. And in general, this is a pretty good assumption, especially for things like Bitcoin. But there will be some edge cases where someone's strategy might be so large for the coin that they're trading that it will actually have a measurable impact on the market itself. So this is some of the whale addresses that we've heard Keith talk about previously actually does move the price of Bitcoin around.
Right. You can't outsize the liquidity. You can't outsize the liquidity in the exchanges you're trading on.
Exactly. And for the purposes of simulation, I ignore these kinds of details. And the reason is that it would only inject ambiguity in the sense that I would have to make a decision as the simulator as to how the system should perform in those circumstances. Whereas if I had better data, especially historical data, we can kind of we can look into how those things have performed and changed and affected the markets and build a model out of it. But it's I find it much less useful. It's generally just better to assume that you're not trading with so much capital that you actually are going to have an impact on the markets. And I think for our retail based audience, that's generally a good assumption.
Mark, one more quick thing. Speaking about the assumptions in the simulator, it doesn't take gas into account, gas costs. But for the strategy that you just showed us, where it is rotating that liquidity back and forth and trading throughout that year, whoever makes this strategy isn't paying gas for all of those trades that are being executed, right? They're paying the gas fee to create the strategy. They're paying the network fee to adjust it if they choose to adjust their price ranges, right? Or actually manage that strategy at all. And then once it's done, if they want to delete it or whatever it happens to be. But throughout the life of that strategy and that trading, that sort of, rotation, they're not paying for that execution, right? That's on the opposite side.
Yeah, correct. It's the same way that generally, and it depends on the specific exchange and how much liquidity you're working with. But in general, makers in a centralized exchange also never have to pay anything. It's the takers in that system from whom the value is extracted, by the system itself. Now on Ethereum, there are two places where that can happen. One is in the form of a protocol fee, and then the other one is in terms of the network fee or the gas fee of the chain. And the gas fee of the chain on Ethereum is the lion's share of that. But yes, the maker in our case, after they set up their strategy, which is what I'm looking at here. So if you wanted to set this up today, you could put whatever numbers you want in to set this up. You would pay a gas cost in order to publish it to the chain, but every time someone trades with it, the gas cost is on them. So you can set this up and trade it in perpetuity without ever really having to pay any gas, except for when you modify the strategy.
So you're creating these strategies and you're sharing them in a copy trading situation?
Well, you can do it in a copy trading situation. That requires a little bit more infrastructure. But it's actually like it is just a
You're opening them up for others to trade against.
Yeah, this is like a true a true exchange in many ways.
Right.
So I think this is like we just publish the data to the blockchain itself.
Mhm.
And that's where it's discoverable, and so you end up with an order book like like anything else. The advantage here though is that you're not trading just on this exchange. So this is what it looks like in terms of how the product is set up. But to people that are using the Ethereum blockchain, this is just like one piece of the entire order book that Ethereum represents. So even if a token is not very liquid, so if we choose something at random here, maybe something a little bit, here's a SHIB USDT one. So this currently has no liquidity in it at all. But if you set up an order here, even just for like $100 or something, it would show up and say, look, there's $100 of SHIB for sale. And even if our book for SHIB was only $100 deep, it's still a part of the millions of dollars deep liquidity that Ethereum represents. And so if a user is going to trade via 1inch or another aggregator, it will show up on their radar as well, which means that you're just as likely to catch the trade that you're looking for, even if our product itself doesn't have very deep liquidity. It's an aggregated liquidity system is the best way to think of the Ethereum blockchain.
So Mark, just a question. I know you have limit orders. Let's take this SHIB example. Let's say that I want to buy some SHIB, but because now it's overextended, I would like to buy it when it's 10% lower. And so you currently don't have liquidity on Carbon. How would it work? So I can set the limit order. It would be on chain, and then when the price reaches my target, do you go and actually get that liquidity from other aggregators like DeFi? Who will be my counterpart? Will it get executed?
Yes, yeah, that's what I'm saying. So let's say that we wanted to set up this situation here. So the price of SHIB is currently at so what, 3 times 10 to the negative 5. And so we could say, you know what, I don't have any SHIB right now.
And I think, right?
It's what?
Doesn't it automatically set to 10% when you do that? Maybe not.
Does what set to 10%?
I thought the orders did. When you create
Oh,
when
maybe
you
they
choose
do.
your token pair, I think they automatically set it. Automatic range is 10% below, 10% above.
Take profit, stop loss levels.
Yeah, if you go limit, then it might be a little bit.
Okay.
Yeah. So I'm setting my limit here. So if I wanted to, I could put $100 of USDC, and this would then just be published to the blockchain the same way that when if I wanted to sell a PlayStation 5 on eBay, it gets published to eBay, and people can browse and find these prices. And because of the arbitrage network that we've developed, we've as soon as the market has an appetite to trade with you, the network will make sure that you get those trades. So if I'm setting, let's be more optimistic and say that we want to get, a price all the way down here. If the SHIB price did come down to revisit this level, even if this is the only SHIB order on Carbon, it has exactly the same chances of being executed as if we had billions of dollars of SHIB. It really doesn't matter. You can use very exotic tokens. So there are some tokens in our system that I've never heard of, like I don't know what 0xLP is, and I'm not sure if we're going to.
Sorry, I know you're
Sure.
sharing the screen. I don't know if you can see, but he's got another question for you.
Sorry,
Okay, sure.
guys, I just wanted to say that I have to drop. So that was really nice having this YouTube thing, and looking forward to see you next week.
Same. Thanks so much, Koryo.
Thank you.
Thanks, Corey. It was
Bye,
great to
guys.
see the dashboard on here.
Thank you.
Yeah, it was. We'll talk to you
Same.
soon. We'll see you next week.
Bye. Bye.
Mark, do you have to drop too? I thought you had a hard stop at 9. Well, at my 9.
Oh yeah, I probably should have.
Drop 10
But
minutes
yeah,
ago.
that's okay.
That's okay. I just heard Mark say that.
You.
I just heard Mark say that we can buy SHIB on eBay, so I'm going to go with that.
I'll be right back.
That's gonna be trending on Twitter.
Yeah.
Well, I know
It's not a bad
Go ahead.
analogy though. Like I do consider Carbon to be like it is much closer in terms of the primitive that it represents to eBay than to like a lot of the things that have come before it.
Right. So
Yeah.
you put your order up. Anybody can buy it from any exchange.
Correct. Right. There's no there's no clearinghouses or anything. So it's still a peer-to-peer trading network,
That's
which
really
means
cool.
that that someone else has to decide that they want to buy it from you. And in a way, that kind of distills what I feel trading is. It's like two people disagreeing on the price of something and agreeing to exchange their risk with each other. But yeah, and here's another good example, because we had to look at 1inch and WBTC before, but a lot of the people I know wouldn't mind if they got stuck with ETH or WBTC, no matter which way the chart went.
Right.
And so yeah, and this is something that I feel like a lot of people already do. They will sit on some Bitcoin, and when it starts to get a little overheated, they'll rotate back into ETH, and then when ETH gets a little overheated, they'll rotate back into Bitcoin.
Yeah.
And so here's an example of that doing exactly that. And ETH and Bitcoin are extremely correlated.
Keith, do you ever do ETH Bitcoin? Sorry, Mark.
Pardon me?
Really? Do you ever do ETH Bitcoin, or do you just do USDT or USDC?
I do on occasion. I'm notoriously a horrible ETH trader, and however, we got a lot of guys in our community who benchmark it against Bitcoin, and that becomes a strategy that when things and I was actually thinking about this yesterday, and I haven't put it together yet, but just like we talked about a few minutes ago, switching your pairs so that you're printing Bitcoin instead of 1inch. I will do. I think ETH has been slightly outperforming Bitcoin lately, but when that changes, I'll put a bot together, a mean reversion bot together that will trade ETH and other alts against Bitcoin so that I can print more Bitcoin.
Yeah.
Question mark about the simulator here. When you get into executing these trades, and pardon my lack of knowledge in the DeFi space still, but when the user is executing these trades, the maker-taker fees that we typically experience in centralized exchanges, there's still a fee structure here. Is that fee structure through Carbon, or is that fee structure going to change depending on wherever you are taking liquidity from?
Oh yeah, so like that's a really great question. So it depends. It does depend on where the liquidity is coming from. But for the person whose trade is the one, like for the person whose order is being filled, it doesn't matter. It's the responsibility of the arbitrageur, I guess, to weigh up, what the cost of moving these things around is. And so the arb network that we're building via the arbitrage fast lane it actually knows how to take those, costs into consideration, including the gas fee of the network, and it will only execute if the arb is, profitable, as it should.
Right.
Um,
So
so
can
yeah,
the user put in a
there,
parameter and say that I'm only willing to pay X amount on a fee?
yeah, pretty much. Yeah, I mean, the fee, like, in a lot of these protocols, the fee is like a very abstract concept compared to like what we're used to in a centralized exchange, because really we're just quoting prices. So it's not like, if you perform this trade with $100, we're going to take a fee out of that. The fee is included in that $100 quote. And in many cases, the fee is completely, abstracted away, and it's indistinguishable from the price quote of the protocol. But yeah, if the user decides that they, will only want to execute trades that are over, some threshold, there are parameters in the bot that allows them to do that.
Very cool. Very cool.
Mark, you want to show us what you just did before we drop?
Yeah, sure.
And I see, Keith's talking about accumulating his Bitcoin there, and I see
So this is,
what was this one?
so yeah, this is ETH BTC, yeah. And so this is this is kind of the recent price history. And yeah, so as Keith was saying, if you get left just holding more Bitcoin because ETH outperforms, then how disappointed are you really going to be?
Good problem to have.
Good problem to have, exactly right. And it's important to remember that, like, this period here, where I've just set these limit orders sort of quasi arbitrarily, this is a very strong uptrend, right? This kind of flat period begins in sort of October of last year. As we all know, we've been talking about it for months. Like, Bitcoin's been on a bit of a tear since then. And so this is the perspective that I wanted to bring, is that, when people say it's so difficult to fade, during an uptrend, it's like, well, what's your numeraire? Because if you're fading versus something like, the US dollar, then sure, like, that's probably not a really good way to trade. But ETH versus wrap Bitcoin, really, really great, fading pair almost all the time. And if one of those tokens happens to moon away, you're generally left holding the bag in something that's still in a massive uptrend. So this,
right, with either of those coins, you're probably going to do okay in the long term if you're if you end up holding the bag.
One.
Unless,
exactly.
unless of course ETH goes full Ponzi and disappears, but that's another show. That's another show. So we've had some interesting price action happening since we started this call.
Yeah. Okay. Wrap us up, Keith.
So when we started this call, we were waiting for Koryo, and we were wondering if price was like nosing up against the all-time high. And guess what happened?
It did.
It did. And then guess what happened?
We pulled back.
It did. So let me see if I can get to that screen. Let me go to the.
I've got the 5-minute chart up in front of me right now as well, right, and I can see that it's actually
I have so much to learn from you guys. Even just my guesses just now. I'm like, what do you think happened? I'm like, it didn't do it.
So it did. It went up and it nosed up right against. We can actually look on the candle chart. It went right above. It went to
69,351,
69,210 on Bitstamp, right? And then it began to pull back deeper. We've actually pulled back further than we had prior to the beginning of the call, down to 64.5 at this point. I drew this little trend line because I wasn't sure if it was going to make it to any of these other targets down here. This is the one I really want to see at 52, but I just, with this ETF demand, I don't know. I don't know if we get it, but you can see on fire charts, we took out this level here that was about 20-30 million, nosed up, and then came back down. My assumption is, there wasn't a bit, remember I said that Brown buys into liquidity, and look what happened. Brown bought into that liquidity, broke that level. And then my assumption is, because we didn't see a huge market sell-off, it started afterwards, but my assumption is that initially algos were triggering the sell-off after hitting that all-time high, and it has continued to come down. We now have some bid support coming into 64K. It's only about 12 million. So is it going to be enough to hold? Remains to be seen at this point. So, you
Check
talked about
on your trading view, Keith. Put it on a 5-minute chart. It looks very dramatic.
on the 5-minute chart. Well, I'll do you one better and take you to the 1-minute chart. And my mean mean reversion indicator is hitting those dips, and it's been so hard to find those pullback levels. Yes, would I really much rather be buying down at these 52K 58K levels? Yeah, but I don't know if we're getting there. So I'm just doing small orders to just keep accumulating little bits by bit. These are very small orders, and they add up over time. And this thing, mean reversion, is a beautiful thing.
Keith, where's the liquidity at right now?
At the moment, well, you can see prices moving pretty easily because it's not there, right? So we have bid support coming in at about 63.9 to 64.5 a little bit. So we'll see. I saw a news headline flash across the screen during the call that I think BlackRock has already done $1 billion in volume for the day.
Wow.
So this is going to, in my mind, it's not a matter of if we're going to break the all-time high, it's a matter of when. And if we get a deeper pullback, it's kind of a gift.
Yeah. Well, awesome. Thank you guys so much for joining me. I love these calls, and I like this new format. So hopefully it works out for all of us. It's nice to see the charts and to see the dashboards and the new simulator, Mark. So thank you guys all for sharing your screen with us and for kind of giving us these walkthroughs.